Hello students, welcome to the online classes of accountancy. Now students, in the previous lecture I have covered the meaning of partnership deed and the rules that are applicable in the absence of partnership deed. In today's video, we are going to discuss the profit and loss appropriation account, the concerned journal entries, the interest on capital, and we will be also solving one back question. Today, at the end of the video, I'll be also giving you homework that is also available on the website of the college in PDF form. So let's start today's video.
The accounts prepared in partnership firm is almost of the same manner in which we prepare for the sole proprietor type of organization. The difference over here is that the net profit that we get after preparing the profit and loss account is to be distributed among the partners. And in order to distribute this net profit, we prepare a profit and loss appropriation account. Now let's see what the book says. It says over here, the only difference between accounting of a sole trader and partnership firm is that the profits of partnership firm are divided among the partners, and usually for this purpose we open a new account, that is the profit and loss appropriation account. Now let's take a closer look on the format of profit and loss appropriation account. This is the format that is given in the book. Now we have the debit side and the credit side, and on the top we write down profit and loss appropriation account for the year ended ... means whatever year that is mentioned in the question is to be written over here. On the debit side we have got particulars, then we have got amount, again we have got particulars, and we have got amount. Now as told you just now, the profit that is being calculated in the profit and loss account is transferred on the credit side of profit and loss appropriation account. So we write it down over on the credit side as by profit and loss account within bracket net profit transferred from PL account. Now let's just check out the various entries that are on the debit and the credit side. As told you, profit and loss appropriation account is a nominal account. That means debit side we'll be writing all the expenses and credit side we'll be writing the incomes and gains. I'm repeating it again. You should always keep this thing in mind that when you are preparing the account, you should keep yourself in the place of the firm and not of the partner. So whenever the salary is paid to the partner, the firm pays the salary. So it is an expense. So it will be written on the debit side, two salaries of partner. If any type of commission is being given to the partner, again the firm gives the commission to the partner. So this commission is a kind of expense and it will be written on the debit side. Interest on capital, the firm pays interest on capital to the partners. So that is why we write it on the debit side, to interest on capital. A and B are imaginary partners given over here. If any amount of the profit is transferred to reserve, that is also to be written on the debit side. The firm charges interest on drawings, and this is a type of a gain, and it will be written on the credit side. So we write down by interest on drawings. A and B are imaginary partners taken over here. Then we calculate the difference between the credit side and the debit side. We have to total the credit side and we have to total the debit side. The difference is treated as the profit. If credit side is more than the total of the debit side, if the total of the credit side is more than the total of the debit side, we get profit, and we write it down as to profit transferred to, if we have two partners like A and B, so we'll be writing A's capital account or current account and B's capital account or current account. Okay, so this is to be done in this manner. Now let's just check out the journal entries related to it. The first entry is entry for transfer of net profit to profit and loss appropriation account. Obviously, we cannot just move the net profit from the profit and loss account to the profit and loss appropriation account. So the entry is profit and loss account debited to profit and loss appropriation account. So this is the reason why it is written on the credit side. This has been credited over here. Now the second entry is entry for interest on capital. Interest on capital is being given by the firm to the partners, and it is being credited to partners capital account because it increases the capital of the partner. So since interest on capital is an expense for the firm, so we are debiting it over here, and it increases the capital of the partner, so that is why we are crediting it. So we write down to partners capital, interest on capital account debited to partners capital account, within bracket interest on capital at ... percent per annum. Now next after that, on closure of interest on capital account, interest on capital is closed by transferring it to the debit side of PL, profit and loss appropriation account, as this is an expense for the firm. As I told you, it is an expense, so it will be written on the debit side. So we have PL appropriation account debited to interest on capital. Now just now only I told you that we have to write down all the expenses on the debit side. So here it goes as to interest on partners capital, which side? Debit side. Now next entry is for interest on drawings. As I told you that interest on drawing is a type of a gain. So first of all, and this interest on drawings reduces the partner's capital, and the rule for capital account is debit decrease in capital, credit increase in capital. So on charging interest on drawings, partner's capital account debited to interest on drawings. So over here, interest on drawing is a kind of a gain. So credit all incomes and gains. So that is why we have credited, and partner's capital is reduced over here, so that is why we are debiting it. On the closure of interest on drawings, interest on drawing is closed by transferring it to the credit side of profit and loss appropriation account, as this is income for the firm. As I just told you that it is an income. The entry will be interest on drawings account debited to PL appropriation account. Profit and loss appropriation account is credited. Why? Credit all incomes and gains. So that is why we'll write it over here by interest on drawings. We have to write it by interest on drawings. Now next after that is entry for salary or commission payable to a partner. Now if we are paying any type of salary or commission, it becomes our expense. We are the firm and we are paying it, so that is why it becomes our expense. So partner's salary / commission account debited to partner's capital. When you are paying it, it increases its capital. Whose capital? The partner's capital increases, and credit increase in capital. On closure of salary or commission to a partner's account, salary or commission payable to a partner is closed by transferring it to debit side of profit and loss appropriation account. As these are expenses for the firm, the entry will be profit and loss appropriation account debited to partner's salary / commission. Now you can see, as it is an expense, so it will be posted where? On the debit side of which account? PL appropriation account. Now next after that is for entry for transfer of credit balance of profit and loss appropriation account. Being profit means this is the case of profit. Profit and loss appropriation account debited to partner's capital or current account. So these were the basic entries according to which we are supposed to prepare the PL appropriation account. Now another thing that you need to keep in mind is over here, any amount payable to a partner such as salary, commission, interest on capital, except interest on partner's loan and rent payable to a partner, keep this thing in mind, is treated as appropriation of profit and not a charge against profit. Now this is a very common question, that what is the difference between appropriation and charge. Always first keep this thing in mind. If a particular item is treated as charge, it will be posted to either debit or credit of profit and loss account. And if it is an appropriation, it will be posted to either debit or credit of profit and loss appropriation account. Now let's see the difference between charge against profit and appropriation out of profit. Keep this thing, this is charge against profit and this is appropriation out of profit. Let's see the nature. It indicates expenses to be deducted from profit while calculating the net profit or loss. This is indicating what? This is indicating the expenses that are supposed to be deducted from the net profit or loss. It indicates distribution of net profit to various head. This is deducted, this is distribution. Recording. It is debited to profit and loss account. It is debited to profit and loss appropriation account. Necessary or not necessary? Charge is necessary even if we have profit, even if there is loss. We have to deduct the charge. Appropriations will be only done in case of profit. Example, interest on partner's loan and rent paid to partner, and over here we have interest on capital and partner's salary. Now another point that we will be covering in today's video is interest on capital. As I already stated, interest on partner's capital is to be allowed only when it is expressly agreed to among the partners. If it is given in the question or if it is given in the deed that you have to give interest on capital, then only interest on capital is given. If interest on capital is to be allowed as per agreement, it should be calculated with respect to time and rate. Always keep this thing in mind that this is given according to time and the rate of interest and the amount of capital. Okay, so these are the two things that we have discussed today. The first one is your profit and loss appropriation account, and this interest on capital, there is a lot to study about interest on capital which we will be covering in the later videos. Now let's solve one back question. Okay, now we can see we have practical questions over here. Question number 1 over here is given. First of all, let's first read question number 1. I'll explain how you are supposed to solve it, and then after that I will solve just now question number 2, and question number 3 and question number 4 will be for homework. The PDF of this is available on the website. You can download it and you can solve these 3 questions for homework. Prepare a proper notebook and solve these questions for homework. Now let me first explain this question over here. It says X and Y are partners sharing profits in the ratio of 2:1. The undermentioned trial balance was extracted from the books as at 31st March 2020. Now a trial balance has been given over here, and then after this trial balance there are certain additional informations given. You are required to prepare profit and loss account, profit and loss appropriation account. Now this is a new thing that I have just now taught you. For the year ended 31st March 2020 and a balance sheet as on that date. Now there are certain other things also given. The value of closing stock is given, depreciation that you are supposed to calculate, outstanding rent has been given, partners are entitled to interest on capital at the rate 5% per annum, and X is entitled to a salary of 48,000 per annum. Now how are you going to solve this question? Very simple. As you have done it in the junior class, you will first prepare a trading account on the basis of the trial balance that is given. Then after that you will be preparing a profit and loss account. After preparing the profit and loss account, in the end you will get a net profit. That net profit is to be transferred to PL appropriation. The format I have just told you. When you will prepare the PL appropriation account, profit and loss appropriation account, it will be very simple. You will just prepare the profit and loss appropriation and try to calculate the profit, the profit that is to be distributed. After preparing that, simple ledgers, capital ledgers of the two partners X and Y will be prepared, and then those two will be transferred to the balance sheet. On the credit, on the liability side you will be posting it. You'll be posting it on the liability side, and this is how you are going to solve this question. Well, technically speaking, these types of questions you rarely get in the exam, so this is just a practice question. I have told you how to solve it. You can solve it on your own for homework. We will be solving question number 2 over here. Now let's just read question number 2 nicely. Girish and Satish are partners in a firm. Their capitals on April 1st, 2019 were 5,60,000, 4,75,000 respectively. On August 1st, 2019, they decided that their capitals should be 5 lakhs each. The necessary adjustment in the capitals were made by introducing or withdrawing cash. Interest on capital is allowed at 6% per annum. You are required to compute interest on capital for the year ending 31st March 2020. So let's just solve this question. Now, as the question says, we have two partners, Girish and Satish over here. Okay. Now, their capitals on 1st April 2019 were 5,60,000, 4,75,000. They decided that from 1st August, their capitals should be 5 lakhs each. Okay. So, in order to make this 5,60,000, Girish is supposed to withdraw 60,000 from his capital. So as he will withdraw 60,000, his capital will be 5 lakhs. And in order to Satish to make his capital 5 lakhs, he has to add 25,000 and then his capital will be 5 lakhs. All this is taking place when? On 1st August 2019, and the rest of the year their capitals remains the same. At the end of the year the value is 5 lakhs over here. Now let's just calculate, as I have told you just now, that the interest on capital will be calculated according to rate and time. So first of all, I'm just for Girish I am writing G. The value of capital at the beginning is 5,60,000. Okay, and how much percentage interest we are supposed to calculate? We are supposed to give him 6%. So 6 upon 100. Now from April to August over here, this is 1st August, so we will not include August. April, May, June, July, 4 months. So time will be 4 months, 4 by 12. When we will solve it, we will get 11,200. This is for 4 months for Girish. Then after that, it is 5 lakhs. Till the end of the year again it is 5 lakhs. So for 8 months, it will be 5,60,000 into 6 upon 100. Why? Because 6% you have to charge, into 8 upon 12. When you will solve this thing, you will get 20,000. Now, what is the total interest on capital? 11,200 plus 20,000. It will give you 31,200. Okay. So this is 31,200. That the total interest on capital for Girish. Now let's see how are we going to calculate for Satish. Satish interest on capital will be calculated in the same manner. From the beginning of the year till end of July, the value was 4,75,000. What's the rate? 6%. For how many months? 4 months. And we will get how much over here? 9,500. Then after that, he added 25,000 and now his capital is 5,000. From 1st August till the end, the value remains the same. The capital value remains the same. So it will be 5 lakhs into 6 upon 100 into, for how many months? 8 months. 8 by 12. So you will get over here 20,000. So now the total interest for Satish will be how much? It will be 9,500 plus 20,000. It will give you 29,500. So for Girish, it is 31,200 and for Satish, it is 29,500. Okay, friends. So we have done question number 2 over here. For Girish, it is 31,200 and for Satish, it is 29,500. Okay. So now for homework, you will be solving question number 3 and question number 4 and question number 1. The next topic will be taught to you by Mr. Abhay Kumar. So that's all for today. See you all in the next video. Till then, keep practicing, stay safe. Bye bye.